If you've been watching the Charlotte market from the sidelines, waiting for something to change, something just did. And the numbers are telling a story that most people are completely missing. Hi, I'm Evie DeJesus with eXp Realty, and today I'm breaking down the February 2026 market data for Charlotte. What's actually happening, what it means for you, whether you're buying or selling, and the one shift that's quietly creating the best window we've seen in years. All right, let's get into it. So here's where we are. The median sales price in Mecklenburg County came in at $440,500. That's up 1.3% compared to this time last year. Prices are still climbing, but the pace has slowed way down. We're not seeing those double-digit jumps anymore. This is steady, sustainable appreciation, and that's actually healthy. Now, here's what makes this moment different. A year ago, the 30-year mortgage rate was sitting at 6.67%. Today, it's closer to 6%. The Fed cut rates 3 times at the end of 2025, September, October, and then again in December. And that's filtered down into real improvement for buyers. That drop, combined with growing inventory and more time to negotiate, means buyers right now have significantly more purchasing power than they did 12 months ago. And the market is responding. Pending sales in Mecklenburg County were up nearly 8% in January. Buyers are coming off the sidelines. Inventory jumped 15.6% year over year. We now have 3,191 homes on the market with 2.5 months of supply. To put that in perspective, anything under 4 months still favors sellers, but we've come a very long way from the sub 1 month levels we saw a couple of years ago. What does that mean in plain English, Evie? More choices. If you're a buyer, you're no longer walking into a showing wondering if the home will be gone before you finish the home tour. That pressure has eased significantly in certain neighborhoods. Now, let me show you why this data matters if you're shopping right now. Days on market. This is the average time it takes a home to go from listed to under contract. That has jumped to 67 days. That's a 36.7% increase from last year. Homes are sitting longer, and that changes the entire dynamic of how you negotiate. And look at this. The average sale to list price ratio dropped to 95.4%. That means buyers are negotiating roughly 4.5% below asking price on average. That's real money, guys. On a $440,000 home, that's nearly $20,000 in negotiated savings before you even start asking for closing cost credits or even repair concessions. So if you've been told this isn't a good time to buy, I would challenge that. The data says otherwise. You have more inventory to choose from, so that's good. There's more time to make decisions and more leverage at the negotiating table than buyers have had in a very long time. The key is working with someone who understands how to use that leverage strategically, because the opportunity is there, but only if you know how to capture it. Now, if you're a seller, this is where I need you to pay close attention. Your home still has value. Prices are up. That hasn't changed, but the market is telling us something very clear right now. Pricing strategy matters more than it has in years. When homes are averaging 67 days on market and buyers are negotiating nearly 5% below list price, overpricing is the most expensive mistake you can make in this market right now. Every week your home sits past that initial moment, buyers start asking, what's wrong with this house? Even if the answer is nothing. The only thing wrong is the price. Closed sales came in at 940. That's down 6.8% year over year. But pending sales held steady, only moving 0.2%. What that tells me is that buyer demand is still there, very much there. People are writing offers, but they're being very selective. And they're walking away from homes that don't make financial sense at the listed price. The sellers who are winning right now are the ones who price accurately from day one, present their home well, and have a strategy behind the listing, not just a sign in the yard. Let's talk about rates, because I know that's on everyone's mind. As of late February, the 30-year fixed mortgage rate was hovering between 5.8% and 6.07%. Fannie Mae's forecast says we'll likely stay near that 6% range for the rest of 2026. Here's what I tell every buyer I'm working with. If you're waiting for rates to hit 4% again, you're going to be waiting a very long time. When rates fall, demand surges, inventory shrinks, and that negotiating power you have right now disappears. The math actually works in your favor today. You buy at a negotiated price with leverage, lock in your rate, and if rates drop later, you refinance. You keep the equity you built and the deal that you negotiated. That's a strategy. Waiting and hoping is not. So what should you actually do with this information? If you're a buyer, get pre-approved right now, not when you find the house. Understand your purchasing power so you can move confidently when the right property shows up. And work with an agent who negotiates aggressively on your behalf, because in this market, there's room at the table. Now, if you're a seller, get a realistic market analysis before you pick a price. Understand what comparable homes are actually closing for, not what your neighbor listed 6 months ago, and invest in presentation. See, the homes that show well and price right, they're moving quickly. They're not sitting for 67 days. If you want to talk through what these numbers actually mean for your specific situation, whether you're buying, selling, or relocating to Charlotte, I would love to help you build a plan. My number is, you can either book a free strategy call or use the link in the description or comments. I'll see you in my next video.